Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market and then learn something from it and then plan for a better trade for the next day. So we had a volatile consolidation day in the market as expected yesterday. We had a mild bearish view. It was bullish today, means kind of some points were gained, although it was a flat close, but the consolidation continues. Let's see how exactly. So here we have, this is the daily charts. Before that, let's quickly see the weekly charts. So basically we are broken out of a consolidation. We have broken out of a trend line resistance and then retraced completely and then bounced up. That's what we are doing. And the daily charts, that's what we are more interested. There's a descending wedge. The market seems to be at facing some resistance all around this area near the 18,400, 500, 300, all those zones. 300 to 500 basically it's heavy resistance. That's what's happening. We had a consolidation that happened yesterday. Today also it's a consolidation if you consider it with the previous to previous day. That's a Friday flat candle. It's still inside that, so it's still a consolidation day today. It's a flat close, 35 points all gains, 0.19% gain. Well, Banknifty was doing good, but there is also a resistance. There is a descending wedge there also. The breakout is about to happen, almost happening, and 222 and 0.5 reasonable gain has happened. Banknifty is showing more strength, but Nifty is basically consolidating. Right. So that's it. So there is a CIP bounce in the weekly that we already know. There is a wedge descending, which we already seen just now. There is a lower high, lower low pattern that is in the Nifty, and that will be clear only after about the 18,475 kind of level. So until then we're not sure whether it's going inside, it's going to break out or not. But Banknifty is showing enough strength, as I said. Yesterday also have a 0.50% gain happened. Today also the same thing happened. So it was very volatile intraday. If you see the intraday price action, understand that, right? It went up and then down and up and down. So inverted V's and V's, multiple V shapes, but all in the range of 100 to 300 points, Nifty and the Banknifty accordingly. Right. So it is a very volatile day. Up move, down move, up move, intraday. Right. So that's what happens when heavy resistance are there. So we just cannot, and those US market was not there. So only local cues are there. Volumes could be less. People still may not have fully come back from the vacation mode and all that, right? So otherwise, yeah, it was a green day, especially Banknifty, right? But we are still at resistance and we are being consolidating, especially the Nifty. Levels remain more or less the same: 18,662, 18,442, 400. That's all. Which is Fibonacci retracement levels or the previous swing high or swing low level. Supports 18,000, 18,071. Fibonacci level again there, 38, 17,800, and the previous swing low, 959 also there, supports Fibonacci 50. 43,500 above, 43,600, 500, that one levels resistance, and 43,853 also level resistance. Downside it remains the same, 42,961, 43,000 would be good support. Then 42,460 after that. Right. Yep, so contraction is what is happening if you have the Bollinger Bands. Clear contraction sideways movement is what it indicates on both the indices in the short term. Momentum is indicating it's still sideways, although the momentum is rising up on both the indices. It's still sideways, right? Both indices, it's still sideways momentum. Trend is interesting. Trend is having contradictory, like bullish strength, the bullish on DMI positive strength on the ADX on the Banknifty, while negative bearish zones is what Nifty is, but both are having not enough strength. So both, it's kind of sideways. India VIX is a call off. It's 14.38. It's a 2% close pull off that happened today. Which is why as a long build-up that happened both indices, right? 18,200 straddles are written. The options are for the January 5th, day after tomorrow's expiry, weekly expiry. It's not monthly, it's the weekly expiry we're talking about, right? So 18,200 and 18,200 is the same place where the highest put and call writing is seen by the option writers. 43,000 and 43,500 is where the Banknifty option writing is seen. So very tight range. Just one more day left for the expiry. Put call ratio is also bullish. 0.961 is bullish. So the open interest is bullish basically, right? And price action is at resistance, but otherwise it's bullish. Sideways is what momentum trend and volatility is going, is doing. Sideways movement is what's happening, but Oil is clearly bullish for the next day, including the PCR put bullish, but we still have some days for the expiring, so anything would happen. We have a resistance up there, that's a key thing. Right. Except Pharma and Nifty, all of them closed. Right, actually, 0.7%, 70% of up was happening. Both the defensive stocks, Pharma and Nifty. Other sectors were closed, but less than 5.50% of fall has happened. Right. Reality was closing fat. Now, FMCG only has got bearish as of now. Others have climbed to the sideways zone. Right. Metal is having bullishness. Metal sector, right? That's what is happening in the sector and the sector wise. Heavyweights, if the lines closed red, 0.73%. In FIC, ICC also closed red but flat. TCS did well, closed green 1.5%. That is the biggest gainer today. HDFC Twins and Kodak Bank all gain, but less than 0.5% up more. Right? All the heavyweights right now, all the we are considering only 7 heavyweights. All of them are right now having sideways movement. None of them are having short-term momentum bearishness as of now. Fyers has been doing the small selling today also. 628 crores of selling happened, 350 buying happened, domestic interest. So fish participation also is lackluster. Nothing was happening there. Crude is falling 1%, which is good. Still falling once again below the 80, which is fine. Dollar index is rising or spiking. Dollar index has climbed back in the sideways from the bearishness. It's around 4.77, and USD/INR for the weekend steady 2.86 rising. So that's a concern. Currency is a concern for our markets. Gold is rising or spiking up from a resistance zone where it had conquered earlier in the 11% up more. And as of now, Singapore exchange is red. Green is in the US markets indices, but US markets in descending wedge and in reversal mode, facing resistance. So big moves has to be observed. Major events is January 2nd is always holiday. It was a US holiday, and people will come back and start trading today. Tomorrow it will reflect. So you'll have global cues from tomorrow. US global indices globally, but US indices are in trouble. Some PMI data is going to come. Manufacturing industry data will be coming today and tomorrow these days. So that volatility will also be there if it is too bad or so good. And Thursday, US job status outcomes. These are the major events. Volatility can be expected on this. REC we had already seen it's shooting up, so it's given yesterday also it was a long call. So short swing long can be taken with HDFC Bank also. Let's quickly see what HDFC Bank is doing. HDFC Bank is having it's very weekly to get a good picture of the charts. It's a flag pattern. It's in a bear zone, that's the only thing. But otherwise momentum is having bullish divergence. And flag pattern combined, definitely bullish. Momentum trend, everything is bullish in medium to and short term. So HDFC Bank, no doubt, when it will break out, just have to keep tight to stop loss below this last Friday's candle low. Right. And REC we already seen surrounding pattern multi-year. REC Limited. Total electrification is a rounding pattern and multi-year rounding pattern actually. So if it is going to break out from here, it will give big gains. With type stop loss, you can still play. Today's candle also is bullish. We are taking the call, so it is higher high is made today. Momentum trend, everything is bullish and rising up. So REC and HDFC Bank, 2 long calls. Now just to wrap up all the different parameter studies that we have done, today's market was volatile, definitely. 2 times V shapes. Right? And that too at a lower VIX, which is not that spiking, but it's very volatile despite that. So it's facing resistance basically, trying to come back again. Bulls are buying and then bears are selling. Bulls are buying, basically. That's what's exactly happened. Finally, bulls won the match and then close green, but Nifty climbed to close only flattish more. Right. So remember, we are having a breakout and then a retracement and then a bounce. Obviously, change in polarity bounce is what is happening. So we can say the market view is mild, continues to be mild bearish because of the very fact that there is resistance out there. Moving averages are still 20 is not cleared by the Banknifty. Banknifty is resisting it below the 20 moving average. That's something interesting to see. Since Nifty is resisting below the 20 moving average, Banknifty is comfortably above the 20 moving average, no doubt. So this is where the problem. So this is a green close above that will make things clearer. So that's the reason moving ahead. Bollinger Band sideways contraction, sideways momentum. Still momentum is not in the bullish sense, although it's rising. Trend is bearish still for the Nifty. Rupee is weak, crude is spiking, US market is resistance, and all of this combined, I still have a bearish view. I will not take the bearish view unless the bullish indications come out clearly on the charts. Right? So mild bearish to neutral is what my view is. So 18,500, if it's close, then I'll be comfortable to say that it's bullishness. Until then, it's sideways, neutral, mild bearish kind of thing is what I would look at. And there is a lower low, lower high pattern that we discussed yesterday that is also in play. If you look at the Nifty charts, it's very much clearly visible. On the daily, you can see lower low, lower high, lower low, lower high. So that will get preached only if this swing high is breached. Until then, we have trouble. That's the reason that view is the same. Hope this helped you in some way. Levels to watch out is what 17,700 swing low, 18,500 upside, 41,500, 43,500 on the Banknifty likewise. So always hedge your positions and protect your capital. If the VIX is spiking up, stay out of the trade or cut short your positions. You set strategies on the overnight, so as you don't know what will happen overnight, your capital could work protect it. That's the only way. That's only trick. Risk management is always a trick, other than studying the charts for seeing where the probability of moving up and moving down is there. And hedge positions, therefore, you have to take. Okay, thanks. So I hope this helped you to frame your market plan and trade plan for the next day in some way. This might have helped you with the technical analysis. If it's helped you in some way, then please subscribe if you're not done. A lot of viewers are just they don't subscribe. Viewing is coming, but subscription is not there. Right? Please subscribe to help us motivate, and we have very few subscriptions now. This will definitely help us to motivate to keep doing this every day. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.